여론의 투자금이 향하는 곳, 그곳에 인류 역사상 가장 거대한 규모의 부채 거품이 숨겨져 있다는 사실 알고 계신가요? 오늘 해외 경제 분석가 안드리 지게 분석을 통해 AI 시장의 비현실적인 밸류에이션 뒤에 숨겨진 순환 금융의 위험성을 파헤치고 이 거대한 그림자가 비트코인에는 어떤 영향을 미치고 있는지 정리해드리겠습니다.
In fact, right now, as of this week, NVIDIA by itself gets almost 8% of every dollar. Now, that's gotten investors very excited about the future of how AI is going to, change our lives. And it's also why their stock values have gone way up this year. And they've been able to spend a lot of money because of it. In 2025, those AI tech companies are going to spend roughly $330 billion to build things like data centers, GPU farms, and all the stuff that they need for AI. But here's the part that's interesting. In order for AI companies to justify their valuations, in other words, what the price of their stock is today, those companies would need to make around $2 trillion a year in revenue. $2 trillion. To put that into perspective, in 2024, Apple, Amazon, Microsoft, Meta, NVIDIA, Google combined did not make $2 trillion. In other words, AI has already been priced as if it's going to become the biggest money-making engine in the history of capitalism, bigger than every major tech company today combined. That's kind of a major red flag.
AI가 인류 역사상 가장 큰 수익 엔진이 될 것이라는 전제가 이미 시장 가격에 반영된 것입니다. 과연 이 밸류에이션이 합리적일까요? 문제는 이러한 성장 기대치가 수익이 아닌 부채로 채워지고 있다는 점입니다. 지금부터 그 숨겨진 실체를 보겠습니다.
Obviously, we are very far away from AI running our lives, but those are the expectations of the stock market. The reality is that they are not being paid for with profits, right? That's called free cash flow. Right now, those companies are all being funded with a ton of debt. And a huge part of that debt is not even showing up on their balance sheet. That debt is hidden. The spending is being run through things like private credit, structured vehicles called SPVs, joint ventures, and what's called circular financing. So what all of this does, though, is it makes the US economy look strong. It makes the stock market go up. But the risk is that it only looks strong because these companies are passing money around to each other in order to make it look bigger than it actually is. And for investors, that means for these companies to be as valuable as they are today, they have to be borrowing from a future that doesn't exist yet. Now, when you add all this up and you look at what some of the big investors have been doing, you might be worried. Warren Buffett, for example, just sold billions of dollars of stock, and he's now sitting on the biggest cash pile in the world. That doesn't look good. And Michael Burry, the guy who predicted the 2008 financial crisis, his fund, Scion, filed what's called a 13F form where it shows he's putting 80% of his portfolio betting against NVIDIA and Palantir. So all of this leads to the question, are we in an AI bubble? I know it sounds a little silly, but what is a bubble?
It was the worst day on Wall Street since the crash of 1987.
Most people say it's when the price of something goes above a sustainable value because of hype and greed. But what a bubble really is when the price of something goes up really fast with no relationship to its fundamentals. It's when nothing changes, but the price still goes up really fast. So let me explain the mechanics of how this AI machine is actually working, and then you can decide for yourself if it's a bubble. So in the AI economy, money, or revenue, is created through what's called circular financing.
And speaking of money, how about the $20 you owe me?
Oh, yeah? Well, I only got 10, so here's 10, I owe you 10.
Thanks. Hey, Mo, you owe me 20. Well, here's 10, I'll owe you 10.
You owe me 20.
Here's 10, I owe you 10.
Here's the 10 I owe you.
Here's the 10 I owe you. Here's the 10 I owe you.
Good, now we're all even.
It's a feedback loop where everyone looks like they're growing, even if the money they're spending was borrowed. Now you might be like, okay, I don't really care about this stuff because I'm not investing in this. Who cares if a bunch of rich tech investors lose their money? Doesn't really concern me. But it should actually concern everyone, because these kind of feedback loops is what creates a situation of too big to fail. If companies are allowed to represent such a huge part of the US economy, they must not be allowed to fail. Because to let them fail would be like letting a competing nation win. And the CEOs of these companies know that the US government will do anything and everything to make sure that we win the race against China. The US government cannot and will not allow this race of AI to just be lost. Now, what all of this means is that the bigger AI gets, the more all of us are involved in it. And the more likely taxpayers will have to eventually backstop it if something were to go wrong.
현재 AI 기업들이 매출을 통한 주가를 올리는 것이 아니라 자금의 순환 구조를 통해 내부적으로 수익이 부풀어지는 시스템입니다. 이 구조가 일반 투자자들에게 중요한 이유는 거대 기업들이 곧 국가 안보와 연관된 too big to fail 위험으로 커지고 있기 때문입니다. AI 시장의 거시적인 위험 요소가 점차 커지고 있습니다. 이제부터 이 위험 신호가 우리와 직접적으로 관련된 비트코인 시장에 어떤 영향을 미치고 있는지 심층적으로 확인해 보겠습니다.
So if you've been watching Bitcoin, you know that it's been going down. It's been doing the opposite of what tech stocks have been doing, which is weird because the macro picture, the big picture stuff, looks good. ETFs are buying. Corporate treasury buyers are here. Gold is at record highs. All of that is true. But Bitcoin is selling off, which is a little confusing. Let's look at Bitcoin. And by the way, full credit to Benjamin Cowan for sharing this on his YouTube channel. He discovered one of the most important concepts in Bitcoin, which is something called the 50-week moving average. It sounds complicated, but it's really simple. If you take the average closing price, meaning the price at the end of the week, for the last 50 weeks, you get a certain trend line. And what Ben noticed is that when Bitcoin is in a bull cycle, it's always stayed above that line. But when Bitcoin's price goes below that 50-week moving average level, that marked the end of the bull cycle and the beginning of the long cool-off period. That's what people call the bear market. Now, I know this sounds kind of like astrology, but this is backed by data going back more than a decade. And this week, we broke below that price point. That's not good, right? Because when investors all start to see that same pattern, they think, okay, that's it, right? That's the end of the bull cycle. So I'm going to sell and I'm going to come back in a year from now. If price breaks trend, when that happens, their rules tell them to sell. And when you have enough people following that same pattern or same signal, that's when it becomes the reality. So that's the technical explanation behind what's happening. But then there's the second force, the macro force. And this theory says this had nothing to do with the charts at all. This sell-off is because investors think we are going into what's called a liquidity transition. And here's what I mean. Let's look at the Federal Reserve's balance sheet, this chart right here. We've been in what's called quantitative tightening, or QT, meaning the Fed has been slowly removing the liquidity or money out of the financial system. The way they do this is over time by letting bonds roll off the balance sheet and just not replacing them. That slowly drains the financial system. But recently, the Fed told us it's going to end quantitative tightening sooner than expected. They're going to end it on December 1st. Now, on paper, that sounds like it should be a really good thing, right? The market should go up. Ending QT means we stop draining liquidity, right? But psychologically, investors don't interpret it that way. Investors look at an early end to the QT as if something somewhere in the financial system might be struggling, right? Now, the Fed tells us, guys, don't worry. Nothing's wrong. There's no cracks in the system. We're just doing this earlier because we want to make sure we're ahead of the curve and we don't cause a recession. But investors are like, yeah, I don't believe you. It looks like a sign that maybe somewhere we are hitting a stress point. Like, have you seen the jobs report lately? Not looking good. Have you seen the AI valuations? Not looking good. So every time in history, when liquidity stress shows up, risk assets don't like it. So this theory says that Bitcoin didn't go down because of some magic line that's drawn on a chart somewhere. It went down because Bitcoin happens to be what people say is the canary in the coal mine. It's the first one to be affected because it is the easiest thing to sell. So it reacts first. So there's a possibility that the stress signal shows up in Bitcoin before it shows up in the rest of the market, which means the rest of the market could eventually follow.
결과적으로 시장의 유동성 변화는 AI와 비트코인 모두에게 중대한 영향을 미치고 있으며 금융시장 전반의 스트레스를 간과해서는 안 될 시점입니다. 앞으로 투자 전략을 어떻게 수립해야 할지 지속적으로 주의 깊게 관찰해야 할 것입니다. 다음 시간에도 시장의 핵심 이슈를 파헤치는 영상으로 찾아뵙겠습니다.